tax on the stock market. The US stock market went up produced 68 billion after Trump was elected. They said corporation tax is going to go down, and they're also going to deregulate more. In the UK, we decided to keep corporation tax at 25%. It used to be 19%, then Tories raised it as a temporary measure, they said, and it's at 25. Now that's fine. I'm not making political judgments. I'm saying what the consequences are for pensioners and you and I. If, like me, you've mainly got US stocks, you are over the moon because your pension and its growth is being driven by American policy. And American policy is growth, it is lower taxation, and the proof in the pudding being that their stock market is at all-time high. So my pension is shooting up. If you're driven by UK because your IFA wealth manager, your useless St James's Place has shoved you in a load of UK companies and put next to nothing in US stocks because they want you, and the only little bit they put in because they want to keep your mouth shut, then you're driven by policies of 25% corporation tax, a stalled stock market, barely moves, and you're not going to get the returns. Okay, so now you can see, because there were elections in both countries at the same time, a direct dichotomy between policies and impact upon pensioners, let alone, of course, I haven't even mentioned the 67% you're going to be paying on inheritance tax if you transfer your assets over the age of 75 to a non-spouse, so to a child, for instance. The potential 67%, that's the maximum that would get hit, and let alone the other taxations. So you have a choice. Now, my SIPP and ISA is now and has been for the last 25 years in largely US equities. Why? Not because I foresaw the rise of Trump or anything like that, but because that Republican policy of lower taxation is the one which causes stocks to grow. Now, you might say, well, what about? Yeah, I'm not talking about social re-engineering and saying, well, wealth transfer from the rich to the poor is the right and just thing to do. Pay up, Alpesh, and do it. That's fine. In which case, I'd put it all into the UK and say, well, you're absolutely right. Now, the benefit for this, why it's a good thing for the UK, and I'm being patriotic, is I've now got American companies working for me, working hard, earning me money, putting it into my pension, and that all gets spent here. Okay, because I transfer the money to Britain because I'm British and I want to spend it in Britain. Okay, I'm actually not one of those who goes holidays 4 to 5, 10 times a year and blows it all on expensive trips. I might have work trips, but actually a lot of my holidays are domestic. The Cotswolds, uh, the, um, the south coast of the United Kingdom, Yorkshire, God's own country. That means that actually you've got the ability to do a bit of wealth transfer and at the same time grow that wealth to begin with. Okay, this is not a criticism of British policy. There is a discussion to be had, and it's specific to Britain. We're not American, about wealth being accumulated in very small pockets of people. The Americans got around this problem because, of course, the rate at which they were creating wealth, the way they got around this problem is they had antitrust laws and broke up things like ESSO. You know what ESSO stands for? ESSO, Standard Oil. John Paul Getty's uh, outfit. They just broke up those. The antitrust laws were to break up the big monopolies. Why? Because they don't want a king ruling them. You might argue they've got one now. But the point is, tax and pensions, you can see a direct difference in the bottom line.